I'm Rob Miller, the CEO of Frontier Asset Management in Sheridan, Wyoming. I'm pleased to introduce our firm to Orion Communities and Orion Portfolio Solutions. We were founded in 2000. We've managed money now for over 20 years with Frontier Asset Management. The principals of the company have managed money through all sorts of down markets, up markets, and have really come to a philosophy of managing money on the downside, really concentrating on risk for clients. Frontier is located in Sheridan, Wyoming. We take a lot of pride that we live and work from the West. We've navigated through major down markets over the last 20 years. Through that, have then gotten national recognition from Investment Advisor magazine, twice named Strategist of the Year and once Manager of the Year, because of the way that we've focused on our clients and managed money to get them towards their goals. So first and foremost, we start with risk. That's our philosophy of downside first focus, and everything begins at that point of risk. That's where we start to build every strategy. Our asset allocation mix is built on that. When we optimize strategies, it's all around the idea of risk and how much a client can potentially lose. That loss matrix is over a 12-month time period, and all the statistics and things that go into that to say, I don't want to lose more than X% of a client account over a 12-month time period. We think clients understand risk by what they could lose. It's spoken in simple terms for the client that this is what the potential loss is. Frontier wants to set our risk for portfolios. We don't want to accept the risk of the market. So if you own a 60-40 portfolio, 60% equities, 40% fixed income, which is a classic kind of balanced strategy, you're accepting the risk of those markets into your portfolio. We don't want to do that. We want to say we're defining our risk, be it 10% for balanced, downside of 20% for long-term growth, but that's as much risk as we want to put into the market. So as stocks get riskier, as we see the potential downside of those into the future increase, we may have to reduce our amount of equities in order to keep the risk correct. Whereas if you are just statically keeping 60-40, as risk goes up, your portfolio is getting riskier, whether you want it to or not. You may be a balanced or a conservative investor, but now you have a lot more risk than you want just because of the nature of where the markets are. Likewise, when risk goes down, so let's say that the expected risk for US equity markets is less, we can buy more stocks. We can increase our exposure to risky assets and keep our risk at the same level, as opposed to keeping a static mix where now our risk is less than we want and losing out on potential return because we're accepting what the market is. We want to set our risk and define what our risk is for our strategies and not have the markets dictate what the risk in our portfolio should be. By creating models for our expected outcomes of correlations, of return, of risk, we can create a strategy that has the potential to exceed goals, but then is set to a downside metric. Manager match is this philosophy that we've created of not only how we select our investment managers, but then how do you put them together in a portfolio? One of the things that Frontier does that's unique in the industry is the way we approach selecting our active managers. So once we've set our asset allocation mix for the downside, we now need to find the managers to manage those asset classes that we want. So how do we find managers to manage our US stocks, our international stocks, emerging markets, fixed income, all of these pieces out there? We have a 20-year track record of finding managers that can select securities, that can move through different asset classes, that add value over passive indexes. So in order to find active managers that do well after you hire them, there's some art there and there's some science there. We can evaluate all 10,000 mutual fund managers that are out there and put them through tests of style analysis and a lot of real quantitative measures to see who's outperformed in the past, who outperformed in down markets, who outperformed through all different types of scenarios. So we can do that to find who's added value in the past, but then who do we expect to continue to do that into the future? That becomes an art. Do we feel that they're going to act the same or better in the future than they did in the past? Or are they changing their philosophy of how they manage money? It's part art and it's part science. We also use passive managers when we feel we can't find when we can't find a manager to cover a specific asset class. The big piece of technology and of research that we've been doing for years is how do you build an actual strategy? It's one thing to have great managers, but then to get them into a portfolio that really works well together, kind of works as that team to build out the strategy, is very important. That's an optimization process that we've created that goes through millions of calculations, looking at every possible combination of these managers, what they've done through time, the times that they may have overweighted growth to value, or times that they overweighted small to large, or all these different anomalies that may be in there. And everything's about going forward, right? It's not how we were invested yesterday, it's how we're invested today to earn money for your clients tomorrow. And that's the piece that we really look at, because we don't know what's going to happen tomorrow, but we can make very good estimates over the long term.
Hello, my name is Cliff Stanton, and I'm the Director of Investments with Frontier Asset Management. I oversee the investment department, which consists of the Research and Portfolio Management Group, as well as the Trading and Operations Group, and I report to the Investment Committee. The Investment Committee consists of 3 members, Gary Miller, Rob Miller, and Jeremy Van Arkel. Gary Miller is the founder of Frontier Asset Management, which began in August of 2000. He leads our capital market assumption development, as well as our risk management modeling, and he continues to be an integral part of our idea generation for future investment research. Rob Miller is our CEO of Frontier Asset Management, so he's also been here since day one, and he's been integral to the build out of everything, every department, every process at the firm, both front office and back office, and on an ongoing basis provides the vision and overall leadership for Frontier. Jeremy Van Arkel is our Director of Strategies. He's been with the firm since 2002. He's based in our Atlanta office. He has led our manager due diligence efforts, and he generates much of the content that we use for investment commentaries and presentations. The Investment Committee at Frontier sets all policies, prioritizes our research agenda, and serves as the portfolio manager for all of our strategies. We manage a number of globally diversified strategies. They share the same investment philosophy and approach to asset allocation. Where they differ is in terms of the implementation of those asset allocation decisions. Within our flagship series of portfolios, which have over 20 years of track record, we implement those asset allocation decisions with actively managed mutual funds. And that series of portfolios can further be divided between portfolios that are meant for retirement accounts as well as for taxable investors. The other primary series of portfolios that we manage are implemented with exchange-traded funds for advisors and clients who prefer more of a passive, low-cost approach. Our globally diversified strategies range from, on the conservative end, our capital preservation model, which has a downside target of only 2%, to our most aggressive model, which is our global opportunities strategy, and that has a 25% downside target. That set of portfolios is intended for qualified money in retirement accounts. We also manage a tax-managed version of those very same portfolios, whereby we are trying to minimize short-term gains and maximize after-tax return. An offshoot of our globally diversified series is the alternative set of strategies that we manage. These strategies are unconstrained versions of our globally diversified series and are benchmarked to more conservative hedge fund indices.
There's a lot that goes into this process. We need everybody on the team operating at a very high level in order to continue to go through our process each month. So we are reevaluating all investment assumptions, expected returns, expected downsides, correlations, the managers we use, the value they bring, how we combine them into portfolios. Should we own 5% of this manager? Should we own 10% of this manager? All of that gets broken down every month and rerun continuously to make sure that our clients have the best chance of success going forward. And that's a lot of data, it's a lot of time, it's a lot of staff, but that's who we are. That's intrinsic to Frontier in the way that we want to manage money for our clients. We can adapt and move quickly through different investment thought, through different investment cycles. We're a boutique firm, but also we're an investment firm. We prioritize investments here. Everything gets looked at from an investment mindset. We're not a sales firm selling product, right? We're selling a service. We're selling a relationship with advisors on the way we do that. And we know at the very forefront of that is the investment side. If we're not great investors, we don't have anything. We don't have anything to sell to advisors, to clients. We don't have anything to service them if it's not great. So because of that, we keep the investments first and we keep that focus on that.
One of the advantages that we have in the selection of mutual funds is that we don't have our own proprietary products. We have no conflicts of interest, and therefore we're free to select from the best managers that we can identify. On a monthly basis, we generate a fair amount of content to help our advisors communicate what we do to their clients. These communications include things such as our asset allocation book, which delineates the asset classes that we utilize and the expected returns and risk profiles of those asset classes. We put together monthly commentaries to help explain our performance, and the occasional white paper to help go more in depth on some of the concepts that drive our portfolios.
My name is Erin Foote, and I'm the Director of Operations for Frontier Asset Management. One of the departments I oversee is advisor servicing. It's a really important department at Frontier Asset Management. It's kind of the front line of Frontier. It does all the servicing for Frontier and our advisors. We work with our advisors like they're a part of our team and a part of our family. And so we are always looking for ways to get to know them and customize our service to them. I have seen the company change drastically. I've mentioned over the years that I've seen 3 or 4 iterations of Frontier, and it just keeps getting better and better with each one. Wyoming's a very hardworking culture. They are always willing to lend a hand to anyone around them. I think Frontier is very similar to that. We love to help each other out. We love to help our advisors out. We really want to be a partner for our advisors.
We talk about the culture of who we are, which a lot of that plays into where we're located. Being so far from Wall Street, being independent thought, being able to really do what we think is best for our advisors and clients, and not having all the noise of the rest of the industry really to play a part in what the expectation of how we should do it. We want to do what we feel is right by our advisors and our clients. Culture is important to us, and that is not only the way we build our firm. The world needs our strategies. I believe we're investing in a manner that everyone needs to know about and everyone would benefit from. Being very conservative to being very aggressive, there's a strategy that works for everybody. I believe that the way we invest money is unique to the world and is very much needed. We had a phrase years ago that was investing today the way that others will invest tomorrow. Well, it's tomorrow. We've been doing this for 20 years, and no one has really picked up on the unique way that we do that. We've been demonstrating it year after year for over 20 years now, and believe we'll continue to do so into the future. And as the world changes, our process has it built in to change, to adapt, to pivot as things need to happen. New asset classes that we can move into the portfolio, new ways of looking at expected returns, always trying to improve that process. What we've created over the last 20 years works really well, but that doesn't mean we can't make it better. And we continue to do that. We continue to bring on investment staff to really challenge the status quo, to really challenge what we've done, to test assumptions, to run new iterations of ways that we can manage money tomorrow that we need to set up today.